Hello, Las Vegas. Over 30,000 people in this auditorium at this conference, a record for crypto conferences worldwide, and I'm joined by people in the room where it happens. As I ask this first question, please introduce yourself to the audience, although I know many of them know you. But I want to start, as we talk about retail, as we talk about Wall Street, what is driving Bitcoin's price up now? Which one?
So I'm Johann. I lead the crypto business at Robinhood. I think for what we are seeing right now in the Bitcoin price has been both institutions that have been able to stabilize the price. You've seen a lot of the ETF coming in, bringing flow. We also see the regulatory clarity bringing a lot more institutions excited about crypto. And you also see retail, using it as an edge on the economy. The vice president said it this morning, like people are actually using Bitcoin and crypto to hedge against what's going on in the government. And we see it a lot right now happening in the US, also in LATAM, also in other places where they're actually using Bitcoin for that.
Seamus, what do you think?
Hi, everyone. I'm Seamus Rocca, CEO of Xapo Bank. I think, the US definitely has a big part to play. I mean, the US is back. It sort of went away for a few years, being less crypto friendly and aggressive towards the industry. And if you think about where we are today, last year we were very proud to sponsor, President Trump being on the stage at Bitcoin Nashville. We had the vice president today. And that is really positive. So retail investors in Bitcoin are maybe not taking as much profit as they have in other cycles because they can see that there's more upside to come. And then, of course, you've got institutions now with IBIT and ETFs being able to get relatively easy access to Bitcoin without having to worry too much about all the trappings of custody or what have you. So I think that's why we're seeing the all-time highs almost every other week, and I think there's still more upside to come.
Andrew, Dave, I want to save you for last on this. Andrew, let me ask it a different way. Is now that Wall Street is in 2024 and 2025, does retail risk getting left behind, or is Wall Street left behind from 15 years of retail?
Thanks, Austin. Hey, everybody. It's a joy to be with you all today. My name is Andrew McCormack, and I have the honor to lead the U.S. team for eToro. eToro, we are OGs in the Bitcoin space. We had the joy of being at the very first Bitcoin conference so long ago, and it is truly humbling and thrilling to see what it has grown into. So thank you all for being here. And it's amazing to think what it's going to look like in 10 more years. So I spent most of my career as a lawyer thinking about risk and worrying about risk. When it comes to, is Wall Street going to mess up the amazing community we've built here? I'm not worried about that risk because the Bitcoin community, this movement is so powerful. The DNA is so strong, and people are always going to control it and drive it and push it to success. But I think Wall Street can help us in that journey. I know Wall Street at these kind of events can be like a four-letter word. It sounds scary, it's dirty, and Wall Street has done things to mess up our economy at times. But Wall Street can also do a lot of good. A lot of the publicly traded companies that make the products and services we use today were built by amazing entrepreneurs that were funded by Wall Street. And I think they can do the same thing for Bitcoin. There's a lot of people out there who, they don't want to open a wallet. They're a little overwhelmed, and products like ETFs to simplify things, take it from this room to the masses. I think Wall Street can help our movement, but it will always be our movement.
Dave, who's leading this rally, Wall Street or retail?
Yeah, well, it's always nice to be able to disagree up here, but unfortunately, I don't think I'm going to be able to do that, at least with respect to Andrew. Look, crypto, Bitcoin, probably more than any other technology ever, has been something that's been led by individuals and has been really a global movement from the start. I mean, if you look at all the various different technologies, they've been, frankly, led by the US, led by Silicon Valley. If you go look at the marketplaces, social search, you name it. And this is not the case for crypto and Bitcoin, led by individuals, led globally. Wall Street played almost a non-existent role for many years. And if we look at institutions, what are they really? I mean, what's an institution? A pension, which is basically managing money for individuals. You go down the line, you look at a hedge fund, okay, they're probably taking on money from a bunch of limited partners that happen to be really wealthy individuals. Institutions are really nothing more than a group that basically serves individuals in their adoption. So the individuals marched out ahead in their interest in crypto, in their interest in Bitcoin. Companies like Kraken, others that represented up here, were there to kind of fill the need, meet the need, non-custodial wallets, you name it. And yeah, look, a lot of the large institutions, slower moving, are now starting to come into the space, largely more so to meet the need of individuals. And so crypto is and always has been led by individuals, is and always will be. Institutions, are there to serve them in the best case.
By show of hands, out in the audience over there, how many of you guys hold Bitcoin? Wow. That's damn near everybody. So my question to you guys who deal with Wall Street, because these people and myself want real answers, what are 2 or 3 Bitcoin indicators, maybe macro or on-chain indicators, that Wall Street is watching and has access to and retail should learn more about?
I think, we actually saw a lot of good price activity with Bitcoin. When you saw the stock market kind of crashing a little bit in the past few months, actually Bitcoin price was pretty steady. If you think about it, right, Bitcoin was around like 85 at the lowest in the past few months. Last year when we were here, Bitcoin was still far from that level. So I think, what the Wall Street people have access to is a bit more of this scale that they can access to on a daily basis. They can, send orders at very different prices, large order size where, not everyone on the retail side can support. But at Robinhood, we've been really focusing on offering the lowest price in average for Bitcoin. And, it's something that we think is really important. We want to make sure that people can invest in crypto at any point and do it on a recurring basis as well. And, at the end of the day, with Bitcoin especially, you will have to have a strategy to do it on a regular basis. It's pretty hard to time a market like this. And so I think, what we're trying to focus on is making sure customers understand how to get into it and have access to Bitcoin easily.
The question was on what indicators Wall Street might be looking at. Yeah.
Yes.
So the obvious answer, if you're one of these large firms, particularly look at a large bank, a large broker, is to look to your customer base, right? And so they're looking at a few different things. They're looking at, back in the day, how many of my customers are buying GBTC? How many of my customers now are buying the various ETFs out there? And a big one they're also looking at, almost across the board, are how much of my customer deposits are leaving our bank accounts, leaving our brokerage accounts, and going to places that likely mean they're buying Bitcoin or crypto. Kraken, Robinhood, you name it, in the various different, they have that data. This is across the board. They're all looking at that data, and that's one of their biggest indicators. When it comes to kind of their high net worth client bases, that's just they're communicating with them directly, and they're getting asked these questions on hey, when are you guys going to support this? When am I going to be able to borrow against my Bitcoin? When am I going to be able to buy Bitcoin? So on and so forth. So they're looking at their customer base, and that's really the impetus here. Again, it starts with the individuals.
Can I just say, if I look at Glassnode reports, which I think are very good, they give you a strong sense of, how long have people been holding their Bitcoin and where have they been holding their Bitcoin? I think we're all Bitcoin holders, so we're obsessed with the price. But if you think about Wall Street coming in, what would I suggest that they look at? It would be, what do those reports and indicators tell you? A little bit about the sentiment. Are people holding Bitcoin longer term, or are they taking profit, and therefore that might anticipate the price coming down? And as we see more and more people using services like Xapo or others, there's an element of trust in the industry that was maybe destroyed a little bit after FTX. And if you think about why is that needed and relevant, well, because the more things you can do with your Bitcoin, the more that the industry will grow. And if you're thinking about, okay, how do we all benefit from that growth of the industry? How does Bitcoin become mainstream? I think there's going to be an element of Bitcoin having to bridge financial services. So if you're seeing a movement of Bitcoin from self-custody towards providers like ourselves or some of my other colleagues here, then that's a strong indicator, I think, that there's trust is back.
Keep my answer really simple, and I hope I make my Econ 101 professor proud. There's a lot of metrics out there. I think the only one that generally matters is supply and demand. We are trying to build a better form of money, a better financial system, and the supply is limited. And every day, week, month, year, demand is going to grow and grow and grow, whether it's retail, Wall Street, countries, states, companies. That demand is going to spike, and with a limited supply in general, things just move one way, and it's an exciting chapter.
Let's dig a little deeper on this and talk about Bitcoin's next catalyst. Is it as simple as pension funds? I would say the last catalyst would have been the ETFs in 2024, strategic Bitcoin reserve. Maybe we haven't seen the effects of that yet, but what is that next catalyst that may lead to a Bitcoin supply shock?
Yeah, I can jump again. People talk about the reserve and corporate treasuries, and those are absolutely right. The thing I think that's not talked about the most is financial advisors in the United States. We have over 300,000 financial advisors in the United States who meet with their clients every month, week, quarter, and they're talking about stocks, bonds, those kind of things, mutual funds. And most of those financial advisors are not allowed to recommend to talk about Bitcoin and those kind of products. And those dominoes are going to keep falling rapidly. And so you're going to have this army of financial advisors from traditional finance, I think soon, recommending Bitcoin ETFs to their own customers. And so we have this upcoming Bitcoin marketing team that I don't think people are talking about enough. And I'm excited for it to happen. It's a win for the industry. It's a win for those companies, but ultimately consumers who they've heard of Bitcoin, but they don't know what it's about. And when they're sitting across the table from someone they trust and know, and now that person's telling them about Bitcoin, I think that's going to make a huge difference.
Would you say 50% are still not able to recommend, or do we know those numbers?
It is way less. I think it's probably 10%. And some of these financial firms have 20,000 financial advisors, 15,000 financial advisors that they're not allowed to talk about it. And I think in 5 years, they all are.
I mean, if you just even look at the top 5, they're not doing it right now, and that's like well over half, the total space. I'd probably rank that group maybe number 1. A close, second is just like all of the opening up the actual true retail, banks, brokers, all the large, with tens, hundreds of millions of clients. And then probably third behind that might be the government side of things. We're starting to see Mubadala has a position in Bitcoin and these types of things. I don't know where Michael is out there. I don't know that the corporate treasuries is going to be that big of a driver vis-a-vis some of these other pieces and just how much capital's out there. And then I think probably the other, institutions fall in line behind it, pensions, endowments, and so forth.
I think for me, this idea that institutions are driving this catalyst at the moment, I think is fairly true. I think there's 2 other things out there that will happen in the future. When, I don't know. But one is, we're on this journey where we're making Bitcoin easier and more accessible for it to become mainstream. So everybody in this room loves Bitcoin, right? But we don't want to be an echo chamber. How do you make it easy for my mum or your mum to be able to use Bitcoin so that you democratize finance through Bitcoin? Well, not everybody can think about seed phrasing or think about how to keep their coin safe. So there's going to be that sort of within the retail space. There's also much more that can be done to make Bitcoin much more mainstream and more than just sort of a price speculative asset. And that leads to the other catalyst, which we'll see probably longer into the future, which is using Bitcoin as a form of enabling cross-border payments. So at the moment, we think about, well, it's just a store of value. The payment use case is dead. I don't think it is. I think you think about the internet and where the internet was in the 90s versus where it's now with streaming. HTTP is still the same protocol, but think about all the layer 2s and even 3s that were built on top of the internet. And I think that there's still a lot of innovation that can happen on the payment side, but that's probably for the next cycle or maybe even the one after that.
Yeah, I think one thing we forget a bit is, 10 years ago, the discussion when we were coming here at the conference was, is Bitcoin a vaporware? Is it something that is actually serious? People were still debating if it's a something that will even exist in a few years. So, something you have to remember is there's only 21 million Bitcoin, right? And so when you see all these companies creating treasuries with Bitcoin, when you see all these countries creating strategic reserve, not just the US, there are more and more starting to look into it. At some point there will be this effect where there's not that many Bitcoin, and therefore the interest will keep going. And I think if you look at the past 2 years, like we had so much development, the ETF, all this IRA and 401ks that can now get access to Bitcoin easily, all this brokerage account that can access Bitcoin easily. You also have all the spot platform being democratized more and more. And so right now it's not about a question of like, is Bitcoin going to exist? It's more a question of like, how much can you get and how much can you hedge your company or your personal finance against Bitcoin?
Show of hands out there in the audience, how many of you guys were here at Bitcoin conference last year and saw my panel? Okay, thank you for coming out again. You guys will remember I was on stage with two of the members of this panel today. So I want to first give it to Johann and Dave. And last year we had a similar topic of retail versus Wall Street getting into Bitcoin. Since then, Bitcoin has exploded. So my question to you guys, I want to keep you guys honest. What have you done or what has been done to keep making sure retail has an edge in this big Wall Street accumulation in the last year from you guys?
Sure that retail keeps their edge. Look, I think the reality is that okay, so last year we were at a place where Wall Street was largely still in a place where they weren't increasing adoption whatsoever. Clearly, the regulation, both here in the U.S. and with MiCA in Europe and other places around the world, have kind of changed that equation, and adoption is now on the move, largely because of that driver. I think, as far as like retail keeping their edge, we're still in a situation now where, for the most part, the institutions are going to, have access to and experiment with, work with a fraction of all of what crypto has to offer. I mean, it'll be Bitcoin only. It'll be potentially, borrowing, lending against Bitcoin and like a few narrow things, and not getting into the full set of services that a company like Kraken offers when you talk about 300 plus assets, staking across several dozen assets, derivatives, all these various different pieces that are already there available for individuals on kind of like a equal and open platform. So not to mention, we haven't even started with DeFi, which, certainly doesn't have, even regulation for the most part doesn't, resurrect barriers for individuals vis-a-vis institutions there. So I think there's a lot of things that just point to this is, there isn't going to be that dynamic that arises for crypto, just given both where we've been, the current starting point of where we are in this adoption cycle, and then again, the existence of, DeFi itself and decentralized finance.
Johann, do you guys have an Wall Street OTC arm, or is it just pure retail?
Currently, Robinhood is only pure retail. We do have an acquisition coming up of Bitstamp that we are supposed to close, and they do have an OTC desk. And we also announced the acquisition of WonderFi in Canada that also has an OTC desk. So it's definitely something we are looking at. And to answer your question on the advantage of retail, I think it's just the speed of execution. For most customer here in this room can learn about Bitcoin, can learn about how to get it. Compare that to an institution where you need to have 20 meetings at least to convince your treasury to start looking at Bitcoin. And then if you think about all the ETF, and at the end of the day, you don't really know the price of the underlying asset, right? Like when you buy on an ETF. And so most of these corporations that are using ETF for that have a disadvantage on retail. And I think the people that are curious and able to learn about Bitcoin, able to use platform like ours to buy Bitcoin, they can actually control everything. They can control the price, they can control the custody, they can transfer it out and keep it on their own wallet. They have a lot of advantage compared to the institution that have like regulation where they cannot even decide where to custody the assets.
Seamus and Andrew, what are we missing? What happens to make sure retail keeps their edge in this next year?
So eToro, we've been offering Bitcoin since 2013, and we are passionate about empowering investors and educating them. And so something that we really press on is investor education. We have tons of courses, and we even started paying customers recently to take courses and take quizzes to learn about Bitcoin, learn about financial markets, learn about stocks, because we're that passionate about it. And we also have a whole social media platform within the same app where you can buy Bitcoin, crypto, stocks, ETFs, where investors can share ideas, look to each other for advice. Because all of us in this room, we get Bitcoin or passionate about it, but most of the people living their lives outside of this world, they're not as familiar with it. So we love being a platform where people can come and ask ideas, ask for advice. And I think just continuing to push into education and empowerment is going to be massive. And then like what I said before, these financial advisors from Wall Street are going to do a lot of free work for us in this community, educating their own customers along the way.
For us, as we think about Bitcoin in the retail space, most people think about Bitcoin as something that you have on an exchange. We think of it, when you have your bank account at Xapo, you have a dollar bank account and you have a Bitcoin bank account. So we think of it as money. So if you think about what are the basic things that you expect when you open up a bank account, that your money is safe, you get an IBAN to send and receive money, you get a card to spend it, you get a savings account, some yield, and you can borrow. That's exactly what we have been trying to build over the last 4 or 5 years on the Bitcoin Bank side, which is replicating that same experience with Bitcoin. So at Xapo, oldest custodian around since 2013, our infamous Swiss banker, Lightning, Bitcoin in and out, with stable coins added to it. You can spend Bitcoin with your card, you can earn yield on your Bitcoin, and you can borrow against it. So all of a sudden, having a bridge between traditional finance and this Bitcoin bank account just adds superpowers to your Bitcoin. You've got all these things that you can do with your Bitcoin in one place. And I think that today, if you want to do anything with your Bitcoin, it carries a lot of risk. You have to move your Bitcoin around, or you have to take it out of self-storage. So I think we design our product for it to be super simple to use so that anybody can use it. My asset test that I give to my UX designers is, could my mom use this? And she does. She actually does have a bank account at Xapo. So I think that's what I think is missing. It's like, how do we move from beyond trading and thinking about Bitcoin as money?
I want to pose this next question to all of you, and it's something every single person watching this stream or out in the audience right now is wondering. Bitcoin price, just for fun, by next year. I want to start with Dave, because Dave, you're one of the guys last year on this panel that had the guts, in the depths of the price not moving, to say, by this summer, so this year, you thought Bitcoin would be at around $140,000. Has it played out like you thought?
What's the first day of summer? It's, I think, June 22nd, something like that. We're going to get there. Yeah, look, it's interesting. I'm actually been like a believer in the 4-year cycle, for what it's worth. I mean, I got into crypto in the earlier part of 2013, so I've been through this whole bear bull thing, or bull bear thing a bunch of times now. For the most part, I've kind of like, become a believer of the 4-year cycle. For what it's worth, I do think each cycle, each of the 4-year cycles become more muted than the previous one. The highs are not as high and the lows are not as low, and so on and so forth. And so I think that is going to continue, probably to the point to where the 4-year cycle kind of dissipates. And I think we're almost probably going to see that around now, for what it's worth. But yeah, look, over the next few months, over this summer, based on the activity that we're seeing, the positive developments on the regulatory side, pushing in, more businesses, institutions that adopt. I think, frankly, a lot of the exciting things that we're seeing on tokenized real-world assets, driving more interest and adoption. We're launching tokenized equities this coming month as well. And so I think there's just a huge number of things that point to kind of continued adoption and growth and excitement and so forth. And so this summer, yeah, I think we're headed for higher highs at this point in time over the next, handful of months, and probably throughout the rest of the year.
And to reset the question, by when we're all on stage next year, just for fun, how high do you think Bitcoin will have gotten to?
All right, I'll jump in. When I face a tough question, I do two things. First, I ask my wife. And second, I ask ChatGPT. I will not say in which order I do that. And so I pulled both of these sources of information. ChatGPT, when I did this prompt, said 142,000 by the next Bitcoin conference. When I asked my wife, she said 150,000. After almost 20 years of marriage, I've learned to never disagree with my wife, but I will on this. And I think it's going to be higher. I think it will be close to 200,000 by next year for the various factors that we talked about here today.
Johann of Robinhood, I know you see the data, the on-chain data. What do you think?
Well, I usually love this question because I started to mine 15 years ago when you didn't even need an ASIC to mine Bitcoin. You could just do it with your computer back in the days. And obviously, I'm still here working, so I made some bad decision around pricing estimation. But I think, at this point, I learned my lesson from these years, and my focus is really much more on the accumulation and making sure that I can get as much of the 21 million Bitcoin as possible, and then we'll see where the price goes. But
Seamus?
Well, let me start by saying I normally don't like to play the price prediction game because I always say my customers or tell my customers that Bitcoin is something that you should think about medium to long term. So don't obsess about the price, just hold it. But since you asked me the question, I think, look, this year we've still got some all-time highs to see. Might hit 150, 200, somewhere in that range. But my fear for next year, though, is I think it might go lower. And I know that's not going to be a popular opinion. But the reason for that is, a bit to Dave's point about cycles, I think we all want Bitcoin to do well, but you can't rush Bitcoin. Bitcoin will take its time to do what it needs to do. And as the adoption picks up, the US is doing a huge effort right now to bring the industry here. That's going to be incredible, but it's going to take time. And I think that maybe next year people will sort of get a bit impatient and go, well, I'm not sure what's going to happen, so I might take some profit. And then that brings the price back down. So I don't think it'll be a spectacular crash, but I think we might be back into the 90s sort of this time next year.
And I want to remind the audience, none of us know what the price will do tomorrow, let alone months from now. This is all for fun. Of course, there's on-chain data and fundamental news that give us clues. Thank you guys so much for joining us. My name's Austin of Altcoin Daily. We speak to an audience of over 3 million across all social platforms. I will leave it to these legends to give their final thoughts and then see us out on the floor.
Well, again, we got a huge opportunity ahead of us, an amazing history. Let's all go change the world and build a better financial system, not just for us, but our kids and grandkids. And like the song earlier, don't stop believing.
Good stuff. I think my first crypto conference was in 2013. I was setting up a booth for the company I had founded. The first person I met at that conference was an individual setting up his booth across from me for Why Bitcoin Magazine. This was David Bailey, who was the first person I met at a crypto conference. And been to many of these over the years, and it's just incredible to see where we've come over the past decade plus. Frankly, while it was the aspiration to get to this place and to have this level of attention and adoption and spread the word on crypto, it's probably exceeded my expectations, which is awesome. I think we have a lot more to go. At Kraken, our mission is exactly this. We are in this to grow crypto adoption with the goal being to increase financial freedom for everyone across the world. And so let's keep it rolling.
I just wanted to say thank you for everybody in the room, for all your energy, for all your commitment to Bitcoin, for all the work, directly or indirectly, that you do. Because I'm sure if you're here, you're involved in the space, or at least working in it or interested. And also, thank you for supporting Xapo Bank over all these years. We've been around a very long time. Building a bank that touches Bitcoin, I can assure you, is incredibly challenging. We've had our ups and downs. But, check us out, give us a chance. We're here to serve you guys. So if you're a customer, thank you very much. If you're not a customer, please come and take a look. Thank you.
Yeah, I mean, same message. I think thank you for everyone that has been in this space for so long now. You know, it's thanks to everyone believing in Bitcoin that now we are in this world where Bitcoin is a strategic reserve at the US government. It's part of treasury for like many top 500 companies. You know, it's such a journey. So really exciting to be part of it and really excited to see where we're going.
Thank you, guys. Round of applause for these legends.
Thanks, everyone.